Hi, this is Tom Nunemaker with Capital Discussions. This is my trading update for Monday, August 4th, 2014. So we have a 2-day chart of the VIX ES futures and the next 3 expirations of the VIX futures. So this was Friday on the left and Monday on the right. Here we can see on Friday where the futures, the August futures went above the September and October futures. We went into backwardation briefly, not at the close, got really close again, but then we opened up a little higher today. Volatility came out and the futures and everything kind of went back to normal contango. See the difference between the front month and the back months is wider than it was, say, here or here. And even during the day, even at the close, it's nice and wide. So I think the fears coming out of the market, especially when we have a let's look at the indexes. SPX was 1939.11, up 13.96, and the ES futures are up 13.25 right now. They're still trading. So good rally today, and as you'd expect, these are the S&P, the red line. Well, it's kind of blue when I hover over it. That red line is the ES futures, is an inverse chart of the volatility. It's pretty close to that. So we got a little bit of relief on our vol. The vol came out today, which is good, helped our positions. Let's take a look at the daily chart. You can see we had kind of a doji here, which could be an indication of a reversing bar and a nice strong bounce back. Now this could be a fake out move. We could come easily back down here. And if that happens, if I was a directional trader, I'd be looking to go short about 1920 or below. If it holds above here, see that's actually 1921.15. So at 1921 I would go short. If it holds above that, I'm not going to go short. I'm just going to hold the positions as they are, because there's a good chance it could just rally back up. There was no real news going out today or tomorrow. I think Wednesday we have one report. I'll show you that. Let's see. So this is the new members site I'm working on. So the upcoming significant economic events. Tomorrow, Tuesday, we don't have anything really market moving, just important international trade on Wednesday, which it might move the market a little, but it's certainly not a GDP or FOMC type of mover. Jobless claims comes out every week, so again, that's not as important to me as something like a GDP or one of the reports that comes out monthly. And then Friday we only have one important event, so really kind of a lack of news this week, and a lot of people are on vacation, so I'm kind of anticipating that the market's going to be a little on the quiet side. Now we did see on the futures, here's a intraday chart of today, 3-minute bars. Here's the overnight action, and you can see when the US market opened right here. Actually, let me turn the crosshairs on. So 15:30 is 3:30 in the afternoon, which is 8:30 a.m. Chicago time, 9:30 a.m. Eastern, which is when the US market's open. So it drifted down a little bit during the day and then back up and closed still up, but not quite as up as it was here. But from high to low, let's see, we were about here. Let's call it 1915 with a high of 1937, so a 22-point range, which is pretty big. We have the SPX up in option view now, so you can see we're still down a little bit of money on a $34,000 trade, down 1,500. I think it's still mostly Vega, and if you look at the analyzed chart, we're nice and flat here, still under our expiration tent, but there's still a lot of time to go, 26 days. If we look at our movement here, we're at 13.2. So our T plus 13 line is here, downside break even 1893. 49% chance is mostly on the downside, but again, as it rallies up, we'll be moving this line up and closing some of the bearish part of it. But we're just trying to keep this flat. And actually, I did make a slight adjustment today. Here's the trades for today. This was SPX. So I did this. I bought back one of my 1945-1920 bearish spreads for $8.70, which is this one. So I basically did this. I closed one of these spreads, and that's essentially buying a bullish put credit spread, right? So it brought in $870, and the trade by itself looked like this, and combined, just helped to flatten it out. Without that, it looked like this. So just leaning slightly negative delta. It was minus 24, I think, when I actually got the trade on, and that brought my delta down to 4, so minus 4. So that's where we are right now. I loaded up the position in the option Greeks calculator, and the Greeks are fine, nice and green. Everything's green, in fact, and you can see that that plays out on our chart where it's nice and flat. So one caveat, if you use this, which I think it's a good tool, and a lot of people do use it, so just don't totally rely on this. I mean, it's a good, just if you have to put the numbers in and get some colors and get your green, and that's fine, but still check and make sure that the risk chart looks the way you want it to look. I'm pretty happy with this, nice and flat. I'm just waiting for volatility to come out and time to pass. If it moves, I'll adjust it again, but I like it nice and flat like this. So let's take a look at the ES position. This is the ES position I've got on. There's actually, remember, 2 positions. The vertical spread expiring in 12 days, and then the broken wing butterfly expiring in 26 days. So let's take a look at the 2 pieces. Here's the analyzed chart. We're looking pretty good on that. And actually, it's combining the P&L, I think, for both of these. So one thing you can do in option view is, if I just isolate in the T log this R column, I've got them, the 2 trades are separated with different letters. So I can use, separating by months, but I can also separate by letters. So here's all the trades, and here's just the vertical. And that's what it actually looks like. So you can see we're up about $275 on this trade, 288, and we're actually below the expiration short strike. So that's what we want. Hopefully it'll stay there, but if not, the hedge is actually helping. We take a look at the broken wing butterfly by itself. That's down $543 and looks like this. I actually put a trade on with that near the close. So here's my ES trade. This was done at, 19.5 minutes before the close. I did a 1950, 1930. I sold the put bear spread. So basically, I did a credit spread to kind of tilt this back a little bit more bullish. So the strikes on that were 1930, 1950. So that's this. This is what I had. Oops, not minus minus. That would be plus minus. That's bearish. So this is what I had, leaning just slightly bearish, but I was looking at that chart and it seemed like it could be a reversal, so I didn't want to try and play it too negative. So I basically did the opposite. I did this, which is a bullish put credit spread. And if we look at just that trade, it looks like this. And if we take it all together, it looks like this. And we can superimpose the 2. Oops, not that one. Not that. Yeah, those 2. So we can superimpose this, even blow it up a little. Not move it, blow it up. And it was just a slight tweak. You can see the lines overlap, but it raises this up just a smidge and lowers this just a little bit. So not too much change over the short term, but I wanted to start peeling off those extra put debit spreads as we start rallying back and moving this part of the trade up. Now we're actually still in really good shape. We're under the tent, the expiration tent. So we'll see how it goes, but I flattened things out. Here's what our Greeks calculator looks like. It's green, everything's in the green, and I always like that when I was flying airplanes, everything in the green. Like down 3 green is your landing gear. That's always good to see. So as you can see, we're pretty close to our expiration break even, and it won't take much. We're only down $500 on this trade. So if we get 2 points of vol coming out and some theta kicking in, it's not going to take much to turn this trade positive. Now if we combine all of them together, we're not even down $300, and the trade looks kind of like this, kind of weird shape because it's combining different expirations. However, it's looking pretty good, I think. So let's recap the market daily. So if we trade below 1921, I'm going to be getting aggressively short because that's a pretty bad bearish signal to me. Right now I don't anticipate that. However, things can change, so we'll just keep an eye on the market and see what happens. So thanks a lot. See you tomorrow. Bye. So this is the new members site I'm working on. So the upcoming significant economic events tomorrow, Tuesday.